Solved problems. Income statement and balance sheet. How to prepare income statement and balance sheet from transactions, additional information and adjustments. Problem. Fororo Makhili is a grocer. The following balances were taken from his books on 31st December 2001. Equity 1 January 2001 40,000 credit. Drawings 5,800 debit. Inventory 1st January 2001 8,700 debit. Property at cost 41,000 debit. Motor vehicles at cost 15,000 debit. Provision for depreciation 1st January 2001 motor vehicle 3,000 credit. For fixtures and fittings 750 credit. Furniture and fittings at cost 5,000. Insurance 2,000 debit. Advertising 1,000 debit. Raw materials and revenue 40,000 debit. Revenue 75,000 credit. Discounts received 1,400. Discounts allowed 800. Returns 500 and 350. Debit and credit respectively. Non-current liabilities loan 5,000 credit. Loan interest finance charges 400 debit. Provision for bad debts 300 credit. Trade receivable and payable. Trade receivable 9,000. Trade payable 3,000. Cash debit 1,600. Bank overdraft 2,000 credit. Total debits 130,800. Total credits 130,800. Additional information. 1. Inventory at 31st December 2001 was 12,700. 2. Insurance premium accrued 400. 3. Bad debts 500 were to be written off. 4. Interest on the loan is at the rate of 12% per annum and had been paid to 31st August 2001. 5. A provision for bad debts 4% debtors at the end of the year is to be made. 6. 1,300 of the total purchases raw materials was in respect of goods taken by Fororo for private use. No record has been made in the books for this transaction. 7. Depreciation policies. The motor vehicle should be depreciated at 20% of the diminishing balance method. Furniture and fittings should be depreciated at the rate of 15% on cost. You are required to prepare the A. Income statement for the year ended 31st December 2001. B. Balance sheet at 31st December 2001. Solution. In the books of Fororo Makhili, income statement for the year ended 31st December 2001, expenditure amount, income amount. On the debit side, inventory 1/1/2001, 8,700, raw materials 40,000, less returns 350, less Fororo drawings 1,300, net raw materials 38,350. On the credit side, revenue 75,000, less returns 500, net revenue 74,500. Inventory 31st December 2001 12,700. Total revenue including inventory is 87,200. When we balance the account, there is a gross profit of 40,150 transferred to profit and loss account. In the profit and loss account, gross profit on the credit side 40,150 and on the credit side discounts 1,400. On the debit side, insurance 2,000, add accrued 400. Total insurance 2,400, advertising 1,000, discounts 800, loan interest 400, bad debts 500, provision for bad debts 340, less old provision minus 340, interest on loan at 12% for 4 months 200, depreciation on motor vehicle 2,400, depreciation on furniture 750. When we balance the account, there is a balance of 33,060 representing net profit to be transferred to capital account. Total expenditure including net profit is 215,950. Total revenue, gross profit plus discount is 215,950. Balance sheet as at 31st December 2001 in the books of Fororo Makhili. Balance sheet at 31st December 2001. Liabilities amount, assets amount. On the asset side, cash 1,600, trade receivable 9,000, less bad debts 500, total 8,500, less provision 4% 340, Net trade receivables 8,160. Inventory 31 December 2001 12,700. Total current assets 22,460. On the credit side, bank 2,000, trade payable 3,000, accrued insurance 400, interest on loan 200. Total current liabilities 5,600. On the asset side, fixed assets, property 41,000, motor vehicle 15,000, less depreciation up to last year 3,000, total 12,000, depreciation at 20% on diminishing value 2,400, net motor vehicle 9,600, furniture and fittings 5,000, depreciation up to last year 750, depreciation current year minus 750, net furniture and fittings 3,500, total fixed assets 76,560 including current assets. On the liability side, non-current liabilities, loan 5,000, total liabilities 5,000 plus 5,600, 10,600, equity 11,2001, 40,000, less drawings 5,800, less raw materials drawn 1,300, add net profit 33,060, total equity 65,960, total liabilities and equity 76,560, total assets 76,560. Thanks for watching. Please subscribe to our YouTube channel Accounts Lobby for various solved problems and lectures on accountancy.